Thanks for joining me in today's video, and today we're going to go ahead and share with you some insights on how you can start investing pretty much immediately, even if you have no money. Stay tuned. I'll give you some thoughts and insights on how to progress further. All right, so I don't know if you're broke, you're just getting started, maybe you don't have a lot of money, but the thing is you can still do some form of investing even if you don't have a lot of capital. Capital, of course, makes life easier when it comes to investing, but if you don't have a lot, there's still some things that you could do to propel yourself forward. In this video, I'm going to share with you some of those insights. So let's get started with insight number one, and that is to start small. It's okay to start small when it comes to the stock market. Start with however much you can afford and increase contributions every month, little by little. This is a huge thing. And if you really take a look at just the compounding effect, here's something from TD Ameritrade on one of the articles here. It's a quick read, but what I want to point you to is this little diagram here. And what you'll see is if you start investing, even if it's something small, start early. You can see the range here. If you start at age 47 versus you start 21, this initial curve, the acceleration of it is basically the same, right? But as you continue going further and further and further, it's the compounding effect. It's kind of like making 1% on your money. 1% on your money on 100,000 is a lot bigger sum than 1% on, $500. So, food expenses, they all are the same for pretty much everybody, unless of course you're going to crazy expensive restaurants and that kind of thing. But if you go to the store, bread is going to be the same price for every individual. So in this case, it's no different. So if you have, let's say, $400,000 and you're making 1%, that's a big chunk versus if you only have, let's say, $2,000 and you're making 1%. So my point here is that if you start compounding these things, it can be a huge win and benefit to your bottom line as you continue to grow on your investment side. Let's look at tip number two, and that is to invest in yourself and invest your time and money in books, courses, coaching, learning new skills that will help you make more money. Now, this could be by starting a side hustle, it could be by getting a raise, or learning to invest your money even better. Now, we have a lot of things on our website here. You could check out on MyLittleNestEgg. There's a lot of stuff regarding side hustles, staying frugal, money on the side that my team researches, and I kind of play out the videos for you. And then if you're interested in more like building a business online, I have another website, backstageincome.com. And then if you really want to get into investing, this is kind of the core that I started with, and this is what I really do, is a lot of the trading on tradersfly.com. So definitely spend some time to learn a bit more about investing, about really just personal growth for building side hustles, for building other income streams, and really having money coming in from multiple sources. It's really going to depend on your time availability, right? If you're a stay-at-home mom with maybe 7 kids, you might not have a lot of free time, maybe a little bit in the evenings or something like that. But beyond that, you might be busy. But if you, just lost your job, you might have more free time, but you're going to have to get things operating much quicker. So anyways, invest in yourself so that way you have more skill sets to be able to ramp things up. All right, here's the next thing. Tip number 3, use your employer's retirement plan. So such things as a 401k or other things like sponsored retirement plans are a great way to start investing with very little money. If you go to the IRS website and you take a look at just the types of retirement plans, it's basically just looking at tax advantages for your investments. And here what you could do is take a look at like a 401k plan and get those things kicked off, and just research a little bit more about these different tax favored or tax sheltered types of plans. So 401k is featured a qualified profit sharing plan that allows employees to contribute a portion of their wages to individual accounts. So this kind of is a nice thing that you could do, and it helps kind of reduce your taxes on just your regular investing. So see what your employer has to offer, and then what you could do is just take a look at some of these different variations of the plans. Again, everybody's going to be a little different, but check these things out and see what's kind of available for you, so that way you could kind of hold some more money back in your pocket when it comes to investing. Okay, let's take a look at the next one, and that is tip number 4, dividend investing. Some companies allow you to invest small amounts of money by purchasing shares directly from them and reinvest the dividends. This is called the Dividend Reinvestment Program, or DRIP. If you look at other dividend investments, basically if you don't know what a dividend is, let me just share with you some thoughts here. Here is Apple. Let's say you work for Apple. But you buy some shares of Apple, just even if you don't work for Apple, you could just buy some shares of Apple and you get a dividend. Basically, let's say you own 1 share of Apple. In this case, you got 22 cents just coming in from owning 1 share of Apple. Now, if you owned 1,000 shares, that's 1,000 times 22. If you owned 100,000, 100,000 times 22. So the more shares you have, the more dividend payments you get. And this happens, as you can see, every quarter. So you've got February, May, August, November, and then it just repeats and loops through the cycle. Here is from the NASDAQ directly. You could see the dividend yield, which is kind of the percentage based on your capital. And the annual dividend right now is about 88 cents from Apple. So you can see in the past it was like 10 cents, 12 cents, 73 cents and that kind of thing. And if you go to dividend.com, this is another way to just kind of check things out. But my point is that if you have an investment program that your company can offer, or if you work for a company where you can share purchase and you get some dividends, that could really help you drive some investments because you're already working, you're making some income from that company. Well, you just keep compounding and getting more money from those dividends. That could be a great kind of thing to think about. And again, if you're not working for a company that pays out dividends and then you can't reinvest them back, then instead what you could do is, of course, try and invest into some smaller forms of companies that do have some dividends. Again, if you don't have a lot of money, you might just start out with a couple of shares, but that starts the snowball effect rolling. Again, the point is you may not have a lot of money. So just buying a few shares just keeps the ball rolling. That's the point, is just get going on it and getting a few shares to build up that dividend income. Okay, let's look at tip number 5, and that is taking a look at fractional shares. If you can't afford to buy 1 full share of a high-priced company, some brokers allow you to invest in a fraction of a share. So instead of buying, let's say, a $300 share of a stock or $1,000 of a share of a stock, you could just get like a quarter or a third. And there's some brokers that do allow this already, like Robinhood, TD Ameritrade, Charles Schwab, Interactive Brokers, and so forth. So definitely check those things out. Most of the time, if you're looking at things like, let's say we're going in, we're buying some shares, you're buying it in lots of, like, say we're going Twitter, it's only $46 a share right now, but you're probably going to be buying it in, let's see, about 100 share lots. Or even if you get 1 share right here, you could do 1 share, but there are sometimes in some situations, some brokers can allow you to get, instead of 1 share, you could just get like half a share. And it may be possible for you, depending on the broker that you have and so forth. So think about it. At least it goes in and gets you started on the investing side, just gets the ball rolling. Because the longer you delay this, the longer, you need that acceleration. And for some people, if you just don't have a lot of money, that acceleration takes a lot longer. And if you're waiting for you to have that money, it's going to take you even longer because now you're not making money on top of your money. So don't delay it. Get started on it. Start pushing your way and coasting your way to create that snowball effect to continue to invest and bring in some form of income. So those are my few tips and insights for you. And these are some of the things that my team came up with. So I want to thank you so much for joining me. Truly appreciate you hanging out with me. Hope you enjoyed the video, and feel free to check out our website to see some other great personal financial videos. Thanks again, and I'll see you next time.